Nvidia doesn't seem to pay taxes. God bless them. They got a tax refund. Bernie Sanders should be furious. Hey, listen, guys, have you heard of Nvidia? Graphics cards, yeah. The kids use them. They use them to make memes or something. Anyway, this is a big company. They make a lot of money, and they don't pay any taxes. 100 million years old, by the way. 10 billion in revenue to 27 billion in revenue in just a couple of years. The consumer market has dropped for Nvidia quite a bit, so they're down 50% year over year. Gaming isn't a growth segment. It never should have been considered a growth segment, and that's why they sort of have to rebalance for that. So 53% growth, then 61% growth, and then finally flat. You know, you can't grow at 50% forever, can you? The point is that even if this came true, you only get 30% upside. People said that about Google, and it just kept growing at 20, 30% every year. You know, if the market's going up, you have to assume the market is smarter than you, and the market's thinking something you're not thinking, and be open-minded. Then, of course, you have to trust your own analysis, too. Yeah, Nvidia is a normie stock pick. I couldn't have said it better myself. Not that normie stock picks are always bad, but and you're late to the party. The stock already went up a ton. And again, that doesn't mean it can't keep going up. It's just the thing about tech that's really important to understand, and tech investing and tech trading, is that value investing generally doesn't work that well. And the reason that is that as the tech company gains momentum, right? As that company does well or above expectations, the multiple, which is not a real thing if you've watched some of my videos, but the other ways the multiple manifests, the multiple concept, which, you know, is things like, really at the end of the day, discount rate and long-term investor expectations, maturity rate, things like that, which all kind of people just condense into this the multiple concept. What ends up happening is investors, let's say Nvidia has a really good quarter, next quarter, investors start to change embedded expectations. So they'll kind of lower their mental discount rate. They'll increase their mental perpetuity or terminal growth rate. They'll throw caution into the wind, basically, because the growth is looking good. And then the opposite will happen with multiple, what people on Wall Street stupidly call multiple compression. The same thing will happen. And again, those are dumb terms, but their shorthands conceptually are pretty good for what they are, which is this idea that investors will sort of change the way they look at the risk of the company, in essence. And that's something that'll change the valuation more than it maybe should. So if Nvidia does grow quite a bit, it'll quote unquote grow into its valuation, as some people say sometimes. But the problem with that is that as an investor, you'll probably miss a double in the stock because tech stocks are that sort of sensitive to small changes. You might see sometimes a tech stock miss earnings by a penny or 1% on the revenue line, and the stock go down 30% or something, right? And that's because the embedded expectations of the investors are really what's the most important thing when you're trading tech stocks. And sometimes those are hard to know. You can kind of impute them from their valuations. But you also have to have your ear to the ground talking to other tech investors and getting a sense for kind of what the heck is going on in the market, which is a skill that most value investors don't care for. And, you know, there is value investing in tech, but you're generally buying sort of beat up stocks. Occasionally you can do value investing and buying growth stocks. So semiconductor companies are pretty complicated because of their cyclicality, deep cyclicality. In good times, you forget that they're cyclical. In bad times, you forget that they're cyclical. In good times, you become very Pollyanna-ish and sanguine, and you feel like, oh, nothing can go wrong. You know, this is a super cycle. You hear that a lot. We'll never have a downtick. You know, and then when the bear market comes and the economic activity declines, you say the opposite. So, you know, these things will never come back. They're just commodities now. You hear both laments. Wow, look at that R&D expenditure at Nvidia. It's kind of amazing. What a profitable company. If you take out the R&D, it's just insanely profitable. Maybe there's a one-timer in here, that's my guess. I don't care about macro these days, CPI and all that. I had a down year-over-year quarter. I knew that. They're sort of struggling at the moment. The stock's gotten killed. This is also really interesting because I'm pretty sure they're fabless, right? So they're a semiconductor company that doesn't make any of their own products. I think they're a Taiwan Semi customer. So that sort of eats into their gross margin, which isn't bad, by the way. The gross margin's pretty high. And again, if you look at the sales general administrative line, it's really an amazing business. I mean, they're how many businesses do you know that have roughly 50% margins, right? Yeah, LVMH is a good example of something that seems to be similar. It's kind of funny that semiconductors and handbags are have any similarity. If we're in a recession, it's certainly not a big one. Unemployment is still really low. Growth is tepid, but growth's been tepid for our country for a really long time. I mean, if you want high growth, you have to go to India or something like that. So yeah, you notice that NVIDIA has almost no property, plant, and equipment for such a big company, a $300 billion company. They only have $4 billion in capital equipment, which is really telling. You know, again, they're fabless, so it's what you would expect. But it's amazing that a company like this, they can make between 7 to 3 billion in 3 quarters. So you could say that's like 10 to 4 billion, let's say 4 to 10 billion in 1 year on just equipment just worth $4 billion, right? It's kind of the way you want to look at the balance sheet and the capital intensity, right? Semiconductors, everyone would think of them as this really capital intensive business, right? Like what could be more capital intensive than making a semiconductor? But here you have NVIDIA with almost no capital, doing just fine. Okay, so net cash for NVIDIA is close to zero. They're maintaining kind of even cash. Just about 3 billion in net cash, almost none basically. Famous CEO Jensen Huang, multi-billionaire, super success story. If you haven't seen Jensen, he's kind of a really interesting character. Here's Jensen Huang. Doesn't he look futuristic? He almost looks like he's from the future, right? Taiwanese American billionaire, business magnate, and electrical engineer. He's very much an electrical engineer. He's a PhD, if I recall correctly.
Something happened about a decade and a half ago that completely transformed computer science. It was possible to use a piece of software called deep learning, a set of algorithms that studies a bunch of data and learns patterns from it. And it triggered what we now call the Big Bang of modern AI. The way that future factories will be designed and the way that companies will be built is in these digital worlds. And as a result, the cost of manufacturing will come down.
Cloud City, take me there. Anyway, let's look at NVIDIA. A lot of this machine learning is powered by NVIDIA chips. So there you go. This is all bullish for NVIDIA, technically. They sell a lot of these chips to data centers. I think you got to spend a lot of time studying a stock before you start investing. That means like at least 100 hours, bare minimum. All right, so here is an interesting situation with NVIDIA. You've got, I want you to look at the revenue line. In tech, you know, it's pretty much revenue is everything. It sort of tells you the direction the business is heading, right? And without revenue, all the other lines are sort of meaningless. You know, margins are important, but you know, for a semiconductor company, it's whatever demand is looking like, right? That's kind of what matters the most. So this is a very schizophrenic demand when you look quarter to quarter, and that's not uncommon with a company like this. And it's probably better to look at it a different way. And so we can do that in 1 minute. I'll show you kind of a different way to look at it. So isn't it odd? They had 46% revenue growth, then flat, and then down. And sometimes it's because there's a glut and things like that. You could rapidly go from undersupply to oversupply in semiconductors and other cyclical industries, by the way. It's in fact quite common in other cyclical industries. The other cyclical industries that most people think about when they think cyclical are things like paper or steel or stuff like that, where they're commodity products. Even with a moving average, the revenue growth is still pretty volatile. All right, so here's another mega growth quarter. So they really just fell off a cliff last quarter, right? And it was really, really surprising. And the question is, what happened, right? They were a $5 billion revenue company just 6 or 7 quarters ago, 8 quarters ago, got up to 8 billion, growing every quarter, mind you. Every single quarter they grew. And again, it makes you wonder, like, okay, is this a cyclical semiconductor company, or is this just a growth company that's never going to stop growing? Clearly, we learned in the last 2 quarters that certainly not the latter. Could it go back to growth? Sure. So there's also the crypto channel they have, and that's sort of, I think, gone to zero, largely, where they sold chips for crypto mining, which is largely now kind of out of fashion. All right, so let's look at the last quarterly result, and let's see kind of what they said. NVIDIA announces financial results for third quarter fiscal 23. Data center revenue, 3.83 billion. Interesting. Okay, so that's the first revenue sort of segment breakdown. And you can see that even though it was down 17% year over year, data center was up to 3830. And that's sort of their AWS, Google Cloud, Azure, so non-data center, right? I mean, we'll get this data a different way in a second, but let's say non-data center is 2.1 billion and data center is 383. And data center was up 31%. So you can compute here that it was 2 billion back here. Interestingly, that means that the non-data center business basically fell 50%. Isn't that wild? So that's sort of the, what do you call it? The game business, I suppose, right? Yeah, no more Ethereum mining, and people that use GPUs for different things, like you can still use them to mine other tokens. We are quickly adapting to the macro environment, correcting inventory levels and paving the way for new products, said Jensen Huang. The ramp of our new platforms, Ada Lovelace RTX graphics, Hopper AI computing, Hopper is a bit of a bigger deal than Ada Lovelace, Bluefield, and quantum networking. I wonder what they're doing in quantum, actually. I wanted to talk about quantum with you guys briefly. There was a new paper that came out that's at a 10-qubit Chinese quantum computer factored integer, 48-bit integer, roughly 200-some trillion. A 10-qubit quantum computer factored this number, and the theory that the Chinese put forward is that they could, a 300 or 400 qubit computer could break 2048-bit RSA encryption, which is really interesting. A lot of people dismissed the paper, which I wouldn't dismiss. I think quantum computing is going to solve some problems, yeah. IBM is saying they'll have a 1,000-qubit computer ready by the end of the year, but I suspect most people don't think that's a legit claim. IBM lies quite a bit. All right, so the ramp of our new platforms is off to a great start and forms the foundation for our next phase of growth. NVIDIA's pioneering work in accelerated computing is more vital than ever. Limited by physics, general-purpose computing has slowed to a crawl, just as AI demands more computing. Accelerated computing lets computers achieve orders of magnitude increase productivity while saving money and the environment. Okay. All right, here's the outlook, 6 billion in revenue. 6 billion in revenue. So down quite a bit, down year over year, quite a lot. Began shipping the Nvidia H100 Tensor Core GPU based on the Hopper architecture. Okay, SC22, Quantum 2 systems. Okay, I haven't checked out their quantum. Bussin'. Has nothing to do with quantum computing. Very misleading name. Oh, they have large language model services. You gotta check that out. That's if you want to make your own GPT, maybe. Let's see, NVIDIA NeMo, toolkit for building conversational AI models.
Researchers are on tight deadlines to achieve state-of-the-art accuracy on tasks like recognizing speech amidst noisy data, understanding nuances in human conversations, and generating human-like speech to deploy in a production environment. NeMo simplifies the development of complex neural network architectures for conversational AI.
All right, so BioNeMo, whatever that is, Bluefield DPU, data processing unit, of course. Isn't that what a computer is? Okay, here's gaming. So that was down 50%, as we assumed. Oh, I wonder what GeForce Now is. Let's see, GeForce Now. Oh, this is like game streaming, I think. Yeah. What games do they have? That's the question. 1,500 games available. All right, professional visualization, down 65%. Oof. So much for Omniverse. Automotive and embedded. 251, up quite a lot. All right, here's some annual numbers. Isn't that amazing? 6 or 7 billion. Oh, no, wait. 10 billion, 11 billion, 17, and 27. All right, so it looks like they'll have a flattish year, but they had this crazy growth. I mean, this was really remarkable numbers. It's almost just riveting performance. So 53% growth, then 61% growth, and then finally flat. You know, you can't grow at 50% forever, can you? Well, Tesla's about to figure that out, aren't they? It's the kind of law of large numbers, right? You can't grow forever. But you know, they said that about Google, they said that about a lot of companies, and sometimes you can grow for a lot longer than people say you can. So don't just take the law of large numbers as some monolith that's always right. It's definitely not always right. People said that about Google and it just kept growing at 20, 30% every year. Right, so there's some more numbers. Let's do this one real quick. That one. Cool. Nvidia doesn't seem to pay taxes. God bless them. Everybody else has to pay taxes, but not Nvidia. Bernie Sanders should be furious. Bernie Sanders here. Listen, guys. Have you heard of Nvidia? Graphics cards. Yeah. The kids use them. They use them to make memes or something. Anyway, look. This is a big company. They make a lot of money. And they don't pay any taxes. What gives? I expect them to pay taxes. 100 million years old, by the way. Let's see. Let's look at fiscal year 19. It's just amazing to see some of the journeys these companies have taken. I mean, could you imagine being in charge of Nvidia, going from having 10 billion in revenue to 27 billion in revenue in just a couple of years? And the company's worth 400 billion. It's 20 times sales almost. Well, to be fair, it's a lot less than that. Let's do the number. 14 times sales, which is quite a lot. But really high contribution margin as well, right? They tried to buy ARM. That didn't go over well with regulators, I guess. I guess not just regulators, but governments. Okay, so they did have a down year here. 2020 was a down year. So it's not like Nvidia's only grown forever and ever. I'm sure they grew after or before that as well, though. Let's see, minus 58 plus 14. They got a tax refund. What the? Once you give the government money, we're never giving it back. What are you, crazy? Giving you a refund? What? How am I going to pay for my vacation homes? Are you crazy? 75, 80% tax rates. That's what we should do for corporations. Bernie Sanders for president. Thank you. All right, so they kind of had like this slowish growth here too. So it wasn't just the last couple of years, really. COVID, I hate to say, maybe it was COVID that made Nvidia grow so much. Did people overbuy these GPUs and now they're just sitting on a ton of them and that's that? I mean, it looks like the cloud part is still kicking butt. You know, Amazon needs to provide all those GPU instances to. I don't think anybody should have financial data. I think the government should control any financial data you may have. Bitcoin. Never, ever we're going to have Bitcoin. Bernie Sanders is going to see to it. It's the last thing I do. All right, so here's some more growth. 4 billion in 2015, 5 billion, 7 billion, 10 billion. They sort of struggled here for this period, right, where they're sort of stuck in this rut and then expanded. And now the question is, are they in this rut and they're going to go up to 30 or 40 billion? Let's assume that that's what happens. Let's assume that margins are around 65%. It's kind of amazing because, I mean, their R&D budget is kind of whatever. The SG&A budget, it almost doesn't matter how much this thing grows. They obviously get scale, but they can get up to 20 billion in net income if they... The problem is they have to start paying taxes. I mean, Bernie Sanders jokes aside, it's going to be a difficult thing for them never to pay taxes. But even if that happens and they double the size of the business, you're still talking about 20 times earnings. And it's probably likely that they'll double the business again, which, again, seems a little crazy given. But they're sort of really well placed and sort of all the technologies that they're focused on. Gaming isn't a growth segment. It never should have been considered a growth segment, and that's why they sort of have to rebalance for that. But they'll return, now that gaming is kind of bottomed, they'll kind of return to growth in their main business, which is now data center. So like, I'll give you an example here. If Nvidia can grow revenue for 30% for just a couple more years and then never grow again, it's a very cheap stock, right? But it's kind of silly to think, not that silly actually, but it's because it is possible. So they stopped growing in 2028. They hit 100 billion in revenue and 50 billion in net income, which is just wild, right? No company is that profitable. We're going to discount at 8%. I guess we should probably do some reinvestment. Let's see. It's a fairly simple calculation, right? The value of any company is the sum of its cash flows over from today to infinity, right? Discounted by some percentage. And here we go. So that gives you 500 billion, which per share is at 156 now, so that's 202. So Nvidia would have to quadruple relatively quickly, right? 30% a year for the next 6 years, which I think Nvidia would be very happy with, right? The rate of growth for the last 6 years or so, let's see, 25%. So if they do 30%, their growth rate's accelerating. This is really 7 years, isn't it? And it's even less. But I'm also, I'm cherry picking. I'm not cherry picking, but like if I say do 8 years and pick this number, maybe it's better. Q9 and P9, okay, it's still 23. So it's all in the 20s. So I'm goosing it to 30, and I still get a stock price that's really not that much higher than where it's at. And somebody's asking, do I think this is realistic? It's possible. The point is that even if this came true, right, which is this is a really valuable exercise, you only get 30% upside. So you'd have to have a pretty amazing run. Now look, they've had an amazing run, right? Look, the company went from 4 billion revenue to 27 billion in revenue. Usually that kind of momentum doesn't just stop, right? It's a freight train going 60 miles an hour. It's not going to all of a sudden hit a wall, right? The freight train isn't going to stop. All the things that are happening for Nvidia that has gone well for Nvidia, they're continuing to go well. They have a great management team, et cetera, et cetera. You have this embedded expectation, right? The embedded expectation appears to be high 20s revenue growth rate, which is going to be very difficult to sustain. Doesn't mean they can't sustain it or even eclipse it, right? They could eclipse it. And again, my point is that let's say they get on track and they get back on track and they have a 30% growth year or even a 40% growth year. And they've had that before. Just last year, they grew 60%. 60%, right? But now they're going 0%. So they kind of probably spread some of this growth unevenly. The point I'm making is that let's say they do have this great year, you'll have all these embedded expectations shift a little and the stock will jump. So remember, from the stock price, you can reverse engineer the embedded expectations and vice versa. From your expectations, you can reverse engineer the stock price. But as stocks go up, they're kind of like a Ouija board of people sort of pulling and pushing on with their supply and demand. And they arrive at an answer that sort of gives you the market sort of feel of everything in one. And you just have to sort of think about that intelligently, right? You can't be dogmatic in any way. If the market's going up, you have to assume the market is smarter than you and the market's thinking something you're not thinking and be open-minded. Then, of course, you have to trust your own analysis too. So it's difficult. Again, the best thing is to really understand the space. And the space here is convoluted. It's not clear what's going to happen. It looks like their omniverse, metaverse stuff isn't going to go well. But, these data centers, I use these data center products like GCP, AWS, and Azure every day. I don't see that slowing down anytime soon. And they really have almost no competition on the GPU side. Will that change? Sure. But it seems like a really smart management team that's ahead of the curve on everything. And we can clearly see a tech-powered world for the future. But again, they hit 100 billion in revenue. Again, the average person would say, okay, if a couple of years go by and they do that, the stock will be a 600 or 700 or 800 billion dollar stock. So it's a tricky thing to do these. If you need more background, like basic information on some of this stuff, I would look at Aswath Damodaran's website. He's probably the best academic finance teacher. and he has a number of, he's over here at Stern, NYU. And his website's been, you know, a pretty good valuation tool. Tons of different lessons and spreadsheets and things on here. I think if you need a valuation primer, this is a little. These concepts are fairly advanced. You know, it doesn't take much to learn how to do a DCF model. It's fairly easy. It's not easy to sort of understand embedded market expectations and interpreting them correctly. And it's very, very hard to understand the behavior of tech stocks. You need a lot of experience, and it's something that comes with time. You know, again, you know, understanding scientifically why you get this weird phenomenon where a small earnings beat will lead to a very large stock price reaction. It really comes from some of these things, right? So like, let me see here. If a discount rate drops 50 basis points, right? And how does one viscerally feel the difference between the 7.5% discount rate and the 8% discount rate or 9% discount rate or whatever it is? Notice Aswath site said that ERP, equity risk premium, which discount rate is constructed from, is about 5% right now. The consumer market has dropped for Nvidia quite a bit, so they're down 50% year over year, which was shocking to me on the gaming side. But the data center side is the growing business.